Josh,
So,
how are you thinking about Nvidia going into the report next? I think it's Wednesday.
5 straight quarters of triple-digit earnings growth is the reason why Amy and myself and many people have clients with really big embedded tax liabilities here. It's a really tough thing. We utilize custom indexing so that we can algorithmically tax loss harvest against some of that position. But to Amy's point, the stock just continues to strengthen. They gave guidance for this quarter they're about to report, Judge. They said $32.5 billion. So the prior consensus was $31.7 billion on data center revenue. From my perspective, if they can do the $32.5 billion plus on data center revenue and not disappoint on raised guidance that they themselves just gave the last time they reported, I think you're okay in the stock. But I want to remind people, this stock, even with good news, has had a history of really short, really sharp drawdowns that can shake people. And as recently as this August, September, the stock was in a 24% correction, a bear market. It didn't last long. If you blinked, you missed it. But if you're in this name, just be aware of that potential. And it doesn't mean Nvidia is a good or a bad investment. It's just the nature of the stock. Not only does it infuriate people who missed it, it also doesn't make it easy always to stick with it because of that beta. And you've got to accept that if you're going to be part of this trade going into an earnings report.
Next Wednesday, after the bell, Nvidia will release its key 3 earnings, providing Wall Street with the most up-to-date and comprehensive assessment of the AI trade's strength. Nvidia, the largest publicly traded business in the world by market capitalization, has seen its stock price soar throughout 2024 as a result of the rapid advancement of artificial intelligence in the computer industry and beyond. As of Friday, Nvidia's stock has risen 189% so far this year, greatly surpassing all of its semiconductor competitors. The nearest rival to Nvidia, AMD, has seen its stock price drop by over 8% so far this year, while Intel, which is struggling with a challenging turnaround, has seen its stock price fall by 51%. According to expert estimates published by Bloomberg, Nvidia is anticipated to report Q3 earnings per share, EPS, of $0.74 on revenue of $33.2 billion, compared to the same quarter last year, when Nvidia saw EPS of $0.40 on revenue of $22.1 billion. That translates to an 83% year-over-year rise on both the top and bottom lines. The largest division of Nvidia, data center, is expected to generate $29 billion in revenue this quarter, compared to the $14.5 billion the corporation recorded in the third quarter of last year. That represents a 100% gain. It is anticipated that gaming revenue would reach $3 billion, a 7% increase over the $2.8 billion earned by the industry last year. Gross margins are expected to reach 75%, according to analysts. Investors will be watching to see if Nvidia improves its outlook for Q4 in addition to seeing if it beats on the top and bottom lines for the quarter. In the upcoming quarter, analysts anticipate that Nvidia will report Q4 guidance of $37 billion in revenue. Shares may still decline after the results announcement, even if the report and forecast are excellent. Even though Nvidia beat the expected guidance and exceeded expectations on both the top and bottom lines in Q2, shares still dropped 6% as soon as the company's results were released. In contrast to previous quarters, when Nvidia's revenue and earnings per share grew by 200% and 600%, respectively, that might have indicated that some investors weren't impressed with the company's success. Alternatively, investors may decide to profit from their gains at that particular moment. Investors are also waiting for CEO Jensen Huang to share any information regarding Nvidia's upcoming Blackwell series of AI processors, which are used for AI application execution and training. Huang stated that Blackwell manufacturing will increase in Q4, when he anticipates seeing several billions of dollars in revenue from the chips during the company's most recent earnings call in August. Huang stated at the time that Blackwell was already in greater demand than it was being supplied, and he anticipates this trend to continue in the upcoming year. Additionally, he stated that it is anticipated that the company's Hopper chip, which was the forerunner of the Blackwell line, will continue to sell well into the upcoming quarter. But with President-elect Trump threatening to impose sweeping taxes on goods from around the globe, Nvidia is also facing an uncertain future. In addition, he has threatened to impose taxes on Taiwanese chips as a substitute for the Xi Jinping Act, which aims to return semiconductor production to the United States. Taiwan-based TSMC produces the great bulk of Nvidia's chips. Nvidia may raise prices for its AI chips in response to a tariff, which would reduce profits, or it may decide to pass the higher price on to its clients. Huang's advice on the subject is likely to be sought after by investors. To stay informed about the latest developments from Nvidia and the ever-changing stock market, consider subscribing to our investing tutorial channel. We provide daily updates on significant market shifts and key catalysts, so hit that subscribe button to ensure you never miss crucial information. We'd love to hear your thoughts on Nvidia stock, so please share your opinions in the comments below. Now let's dive into today's video.
Absolutely. To the chips, you chose Nvidia. It's always hard to tell if people are going to love or hate kind of the leader in any given space. You're liking it today. It is down about 4% this week. It's tripled on the year. It's also down 4% today. Why?
Because there's nothing else out there. You're going to do a DRAM play on Micron. You're going to do a relative valuation play on QCOM. They have the only thing that exists. And so while I hate the concentration, I hate breadth, I'd rather wallow around in small cap value like it's 2002. If you're going to bother in chips, just go for the 800-pound gorilla and go home. It's Friday.
Lee, never failed to deliver. You buying the overall market here or no? 10 seconds.
Yeah, I love the market here. I'm probably going to buy a little bit more next week, but I got my buying hat on. The Trump pump has happened. The Trump fade is happening about a month before I thought. I think if you have cash to invest, this is your chance. Every portfolio manager is going to be buying dips until the end of the year. We have one right now.
Lee Munson, thank you, sir.
Contra Investment Exchange posted a positive thesis on Nvidia Corporation on Substack. We shall provide a synopsis of the bull's thesis regarding Nvidia. The share price of Nvidia Corporation, Nvidia, was $146.27 on November 13. Nvidia's P/E was 37.45 for forward and 68.57 for trailing. Nvidia remains a technological mainstay, particularly as demand for AI and data centers rises. The company has received a lot of attention lately, and analysts have upgraded their price forecasts to $150 to $185, indicating a market valuation of up to $4.5 trillion. This hope is based on Nvidia's leadership in AI and high-performance GPUs, especially in its data center market, which is expected to fuel strong growth as hyperscale computing and independent AI projects spread around the world. Nvidia is now in a strong position to meet significant demand from both established and developing areas, including the Middle East and Asia Pacific, where government-driven AI initiatives are gaining traction, thanks to the release of state-of-the-art GPUs like the Hopper and Blackwell series. Additionally, Nvidia's dedication to developing next-generation AI capabilities is demonstrated by the planned introduction of the Blackwell Ultra GPU and upcoming platforms like Rubin with HBM4 technology. This expansion is best illustrated by Nvidia's revenue trajectory, which is expected to rise at an impressive compound annual growth rate from $26.9 billion in FY 2022 to $129.3 billion by FY 2025. It is anticipated that the data center market alone will make a substantial contribution to this increase, demonstrating Nvidia's strong product demand. Nvidia has demonstrated operational resilience in the face of supply chain difficulties by investing in CoWoS, chip-on-wafer-on-substrate capacity, which has increased production by 30% annually. By increasing its capacity, Nvidia is better able to satisfy consumer demand and maintain its competitive advantage. In terms of finances, Nvidia's profitability has increased in tandem with its revenue. By FY 2025, Its EBIT margin is expected to reach 66.6%, and its ROIC is expected to surpass 400%, highlighting the company's effective capital allocation and pricing power. Given that EPS growth is expected to increase from $2.95 in FY 2025 to $6.17 in FY 2026, Nvidia's valuation, while pricey at 50x projected earnings for FY 2025, is warranted. Furthermore, it is anticipated that Nvidia's free cash flow will generate 4.4% by FY 2027, bolstered by robust operating cash flows and an anticipated net cash position exceeding $200 billion. Nvidia has a very bright future, but there are hazards involved. Potential obstacles include competition from Intel's MI6 chips and geopolitical difficulties, especially those involving China. However, for individuals looking to gain experience with AI and data processing, Nvidia is a compelling investment due to its planned growth and strong financial position. Nvidia offers a distinctive blend of growth and profitability, with a market valuation that might reach $4 trillion. However, investors should be wary of any obstacles that might affect the company's course. So, what implications does this have for Nvidia's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication, so if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on Nvidia stock in the comments. Your support truly helps us grow. Now, let's get back to the video.
All right, so is there opportunity? So if people are selling off, maybe taking some profits, does that mean when we do see selling upon selling, maybe that's a buying opportunity? Does it work both ways?
Yeah, I mean, if you look at this year, the sell-offs have proven to be good buying opportunities. So, we haven't really had a significant pullback. I think 110% pullback this whole year. So, yeah, my advice to people would be to sit back, see. We have Nvidia reporting next week. That's certainly going to be a big impact on the markets to see if the AI and the semiconductor space is still performing well. And if it is, yeah, if we continue to see caution and a sell-off, absolutely, I think you do put some assets to work and buy certain names or certain sectors that look attractive.
So are you into the dividend aristocrats? Are those names that you've been buying this year?
Yeah, I mean, for me, this is a long-term investment strategy, right? A lot of these names are big, well-known. You could call them blue chip names. And so these are companies that have proven in all types of economic cycles to perform well because they've increased their payouts to shareholders every year for 25 consecutive years. That's pretty hard to do. If you think back and look at all the different economic cycles, the environments we're in, these companies continue to reward their shareholders and grow their dividend. And to me, that's very important. And there's several names in there that continue to outperform the markets, which is hard to do if you look at their long-term returns. So absolutely, I like the dividend aristocrat strategy. And for those who can reinvest those dividends, that's where the real bang for your buck is going to come by compounding your growth, right? You reinvest those dividends back into more of the shares, and that's going to pay off down the road.
According to the statistics, Nvidia was owned by 179 hedge fund portfolios at the end of the second quarter, up from 186 the previous quarter. Even though we are aware of Nvidia's potential and risk as an investment, we are convinced that some AI stocks have a better chance of producing larger returns in a shorter amount of time. As the semiconductor giant continues to expand its dominance in the artificial intelligence, AI, sector and prepares to release its Q3 financial results on November 20, Wall Street analysts have updated their price estimates for Nvidia. With an impressive 203.57% year-to-date gain, Nvidia's stock price recently increased by 7.74% to $143.01, ahead of Nvidia's forthcoming Q3 2025 earnings announcement. Analysts are still upbeat. Investor optimism is further bolstered by the expectation that Nvidia will disclose revenues of $32.5 billion, Prior to the earnings call, a number of prominent analysts have increased their price targets for Nvidia. The most aggressive competitor was Frank Lee of CNBC, who raised his target from $145 to $200, indicating a 36.78% upside based on the company's expanding data center business. Christopher Rolland of Susquehanna increased his goal to $180, pointing to the high demand for Nvidia's H100 and H200 chips. Rich Schaefer of Oppenheimer raised his goal to $175. Simultaneously, Srini Pajjuri of Raymond James lowered his target to $170, but pointed out that any drop in the price of Nvidia's stock could be seen as a chance to purchase. Wedbush's Matt Bryson also increased his goal to $160 due to more optimistic revenue projections. Nvidia continues to be a major player in the market for AI-driven semiconductors, with price expectations between $160 and $200. Analysts advise keeping a careful eye on the market's overall volatility and its high P/E ratio. As always, sharing your thoughts and insights in the comments section can foster a more informed community discussion, helping everyone navigate the complexities of investing in this dynamic sector. Stay ahead of the game with the latest stock market news, data, and important updates. I share valuable insights and real-time information on my Telegram channel, ensuring you're always informed before everyone else. If you want to keep up with the fast-paced world of investing, open the description below, click the link to my Telegram channel, and join our growing community. Don't miss out on